for Yatharth Hospitals. And of course, others have all done very, very well. Vaibhav Sanghavi, CEO at Ask Hedge Solutions. Vaibhav, good to have you with us here. Thanks for joining us. I think there is I was just thinking, BSC has launched, or who's launched? There's a hospital index, ETF, which you can buy. I think stocks are is made up of some 10 hospital companies. Any thoughts on the space, Vaibhav, and what to do here? Because it's completely re-rated in the last 2 years. Most companies have re-rated.
I think, Prashant, the opportunity in a country like India, especially in the segment of healthcare, continues to be pretty robust. And from a forward-looking perspective, I think there's a long way to go. Now, of course, every company would have their own capacity increase in terms of the plans, along with optimization of revenue per bed. So it depends on their individual companies' kind of efficiency levels with respect to the whole business, where you would probably ideally want to see return on capital employed and then kind of go and invest into select companies. But on an overall basis, I think my belief is that the opportunity itself is pretty huge. So virtually most of the companies doing even on an average basis also will continue to do well.
Okay, all right. Hi, Vaibhav. Good afternoon. Good to see you, Ved. How are you feeling about the markets, though? Underperformance, par for the course, and things should look up from here? Or do you think there's still too much of uncertainty that maybe our markets will continue to underperform? Your take on that? I think you want to come in with a word on the FI flows as well. Should it turn around?
Sure, Nigel. I think, an extremely important point, and we have been, as a market, pretty much huge underperformer for this year as compared to the other emerging markets. Now, there are many reasons to it, and one of them is basically that one on a relative growth numbers. At the same time, looking at the other artificial intelligence opportunities in countries like China, Korea, Taiwan, they have been kind of seeing rebalancing in their favor as against the India. We had seen that in India a few years ago was having an allocation which is at overweight as compared to the other emerging markets. Whereas now we are at this point in time, we are actually underweight the other markets. So all in all, looking at a 12-year decadal low ownership of FPI, along with underweight position in the emerging market basket, our view is that this is a key to kind of see that the market kind of breaks that range, from a medium to long-term perspective.
Okay, all right. One theme that you've liked is these platform themes. And some of them have done very, very well. From the lows, whether you look at a Paytm, Swiggy, Eternal, erstwhile Zomato, they've all done well. Even Nykaa, if you want to put it in that. Do you think that the platform theme is just heating up?
Of course, I think platform is a unique combination of a power of advantage in technology, along with the overall consumption push, which we are seeing from an economic perspective. So our view is basically that the whole space within the platform plays will continue to do very well, not only in the stock prices, but in terms of the underlying market share, which they will be able to kind of keep on increasing as well. So we are very constructive on the whole segment, and our view is basically in the next few years, they'll continue to keep growing their market shares.
Okay, and earnings season's round the corner. The private sector banks will have to do the heavy lifting if this market needs to move up. You think they're set for more? If I look at Kotak Mahindra Bank or HDFC Bank, their quarterly numbers actually were quite good, the operational update that they give.
See, I think, yes, the quarterly numbers have been a little better than expected. The only caveat is basically that the net interest margins across the banks would be slightly under pressure, purely because of the repricing of loans versus your fixed deposits. Our view is basically that this quarter we might see, to some extent, bottoming out of net interest margins, or probably it may kind of have an effect one more quarter, provided the interest rates are stabilized. And if that is the case, then the focus will then shift to growth. And from a growth perspective, while a broader economy is doing well, especially on the consumption side, those guys who have deeper penetration in the personal loan segment will not only kind of grow, but at the same time improve in terms of the margins as well. So our view is basically this quarter results may be probably a little subdued, but that is an opportunity actually should be taken to kind of load up the banks. And in addition to that, if FPI flows kind of return back, then the first target would be the financial space or the banking space wherein they would invest as well. So I think this is a sector for the next 12 to 24 months can be looked at for a decent up move.
Okay, all right. So private banks is what you like. What about tech? There's a debate that goes straight down the middle. There's an equal number of people who are optimistic, and there are equal number of people who are pessimistic. Which camp are you moving into?
Unfortunately, I mean, as we see things from a technology sector perspective, the discretionary demand not coming back. At the same time, more importantly, I think the revenue pool on overall basis under pressure purely because of improving efficiencies due to AI, and close to about 35 to 40% of the code now being written, in AI. Our view is that the revenue pressures will continue. Of course, the margins may kind of hold up purely because you're getting or deriving some efficiencies. But in an industry where revenue is under pressure, our view is that from a medium to longer term perspective, we will have to wait for to get constructive to see concrete evidence of that coming back into place. So till then, we would be probably underperforming, or we would be keeping them in the category of underperformers.
Okay, all right. And those are live visuals, I think, that are coming in there of the Navi Mumbai airport. Our Prime Minister Narendra Modi as well out there with Chief Minister, Mr. Fadnavis is there. I think Mr. Shinde as well as Mr. Pawar. All of them out there. So looks beautiful, actually. I saw that wide angle out there. Looks pretty good. And all the top ministers out there at that inauguration as well. So got another airport. So eases things up a little bit. But getting back to the markets, Vaibhav, final question. We are looking at the Fed action. We're looking at monetary policy, measures, fiscal measures as well. What about politics? Since we had some of our ministers on screen right now, how important is the upcoming state elections?
See, I think we have seen numerous amount of state elections come and go. Honestly, the markets, apart from having a reaction on 1 or 2 days, honestly comes back squarely to the earnings, on what the companies would post earnings from a medium-term perspective. So honestly, we don't lay much of stress on the on the temporary political kind of changes which may happen from a state-to-state perspective. Yes, of course, general elections are always important, and that is something we always keep a track of. But otherwise, from a state perspective, that's something we'll continue to pass in that sense from a judgment perspective.
Okay, all right. Thanks a lot, Vaibhav, for joining in and giving us your view on the stocks that you like, private sector banks, some of those platform plays as well, is what Vaibhav likes, and he's optimistic that the Nifty actually will start finding its feet from here on. One stock before we slip into that short break, I think BSE should come up for you.